Welcome everyone to another episode of Back and Forth with Becker Orr. Kevin are ready to go. Lots of fun topics, so you can see all of them on the bottom of the screen, including the leadoff topic, which is commodities, that big commodity rally, energy prices going up. Is that here to stay? We're going to tackle that, so you definitely want to stick around.
Yeah, there's going to be a lot of fun that we'll have today with it. Please forgive me if I'm slurring my speech, as I'm back from the dentist today, so I may be sliding off the side of my face. If you want, though, please make sure you go to our YouTube channel and subscribe. You'll get more and more of the Back and Forth, all our financial 15s and anything else that comes around that point. Or like us on Facebook. And again, especially go to our website, beckerorr.com. We are really got a lot of information there, blogs, the whole 9 yards, also involved in our webinars coming up. Okay, so today we're going to talk starting on the commodities market. Why are we talking commodities today, Clint?
Well, if you haven't noticed, when you fill up the car, it's quite expensive.
Yeah,
gas prices have gone up, food prices have gone up. Commodities definitely part of that overall inflation story.
Mm-hmm.
And how long does that trend last? Well, that's kind of debatable, but we'll have to see. But a chart here, this shout out to All Star Charts. They put this together, and it's a ratio chart looking at the S&P 500 versus the Bloomberg Commodity Index. Essentially, when the line goes up, that means stocks are outperforming. So you're making more money in the stock market than in commodities. When the line goes down, commodities are outperforming. So commodities are doing better than stocks. And the point here is it tends to have trends. It's not just it happens for a month and then back, or a year and then back. You can see in the 70s, a decade there where commodities did better. Then you had a 2-decade span where stocks did better. Then 9 years where commodities did better. Then a 13-year stretch where stocks did better, Kevin. And then we just had a turn where commodities are now starting to take the lead. So does that mean this commodity rally is here to stay?
Well, it's a harder call, but yeah, I mean, I would definitely say it's not a short-term event by any stretch of the imagination. I mean, we've got to consider the fact that we have supply constraints, that we are looking at the point of, there's building still going on with homes and everything else. So that commodities market should be around for quite a while. Not only that, but they tend to do fairly well in recessionary timeframes as well, because they're things that you need. I need heating oil for my house. I need to gas up my car right now because it's not all electric. Or even if it was, I need the power to be able to do that. So the sources of the commodities are there and should continue for a while. Now, I'm not saying it's going to be 9 years, 8 years, 11 years, but, it should last through 2022, probably 23 into 24 scenario. So we could see this play for a bit.
Yeah, so it's not going to be who knows if it's a 5-year or a 2-year, but it's probably not 2 months. That's the idea.
No.
It's likely not a short-term.
Exactly.
And if you go back on the chart here, you can see that 2000 to 2010 range there, that 9-year trend where commodities were outperforming, that blue line was going down. Well, think about that environment. Inflation was high, interest rates were going up. Similar to what we're seeing now with inflation and interest rates. No 2 periods are exactly the same. There's always unique items, but you have some of the same pieces then that you're seeing now. So it makes sense to see a little more of a commodity run. It doesn't go straight up. There's going to be peaks and valleys along the way, but the idea that this is a 2-month blip, probably not the case. You're probably going to see a little more out of commodities. At least that's the idea, right?
Yeah. And again, when you start talking recession on that sort of scenario, I mean, gold becomes a big play, and that's also considered in the commodities market. So people tend to go into those sort of scenarios, but
that's right.
It is something we have to watch.
Commodity, right? Part of the commodity complex.
It is. So, yeah, I mean, and dealing with the commodities, of course, we've talked inflation there. What a great segue to get into interest rates. Now, as we take a look at it this way. Now, the interest rate scenario we saw in Canada last week went up by a half basis point. What are we talking about here, Clint, with the Fed in their meeting next week on Wednesday?
Yeah, so Canada moved 50 basis points. What you're seeing on the screen is the CME group. Specifically, they put together this probability based on traders. So what traders are believing is going to be the rate hike. And it's almost guaranteed at this point, 99.6% probability that the U.S. moves 50 basis points next week. And you can see that 0.4% is a 3/4 point move. So you're seeing likely a very strong indication from traders here that the Fed is going to be mimicking Canada, following with a 50 basis point hike next week. Now, that's not really a surprise. They came out and said it. That's probably why there's such a high probability, as Powell pretty much said they're going to do it next week. It's more the implications here, Kevin. Do you think they're going to do this once and then be done? Do you think there's going to be a couple of 50 basis point hikes this year?
No, I think there's going to be a couple of the 50 basis point hikes. And the only rationale behind that is you got to get to that point where all of a sudden we start to see that inflation's either flattening or it's starting to go down. I mean, it's been almost 6 months in a row consecutive. You've been seeing an increase, an increase, an increase. I mean, Canada, you're 4%, then you're 5%, then you're over 6, you're almost 7 now. The Americans are over 8. That's got to stop somehow. And the faster that goes up, the more they're going to want to try and peel it back. And the only way you're going to be doing that is by raising interest rates. And of course, they're slightly behind the curve again. I mean, had you started this 6 months ago, maybe you could be doing a quarter, but they want to make sure that they can catch this fairly quick. So you'll get a half this time. You're already getting that hint that at the end of June, you're going to get another half out of the Fed. Mackling here, should I say Tiff McCallum here, has come out and basically said the same thing, that he's looking at a half point. Of course, they always taught that 3/4 out there, but no, I think you're going to sort of maintain that half point. You might get 2 or 3 more of these at the most. Then we should see some sort of a correction going on with where those rates are going.
Yeah, and you got to think the context here. So the economy is still doing relatively well. The economic data that's coming out hasn't been horrible. It's actually been pretty decent. In some cases, it's been surprising to the upside. Earnings have still been pretty strong. We're in the mix of earnings season, so we'll see if that continues. But the point is, they're getting the feeling that the economy can handle the rate increase. So I think they're starting to speed it up. Maybe the original play was to do these little quarter-point increases. Now they're saying, no, we can go faster. Let's really bite inflation. And they're doing these larger moves. Now, how will that end up? A year or 18 months from now, I'm not sure. Maybe they'll go too far, too fast. You can never tell until after the fact. But that is clearly the direction they're going. They're speeding up the rate hikes, both in Canada and in the US. So something we will have to contend with.
Yeah, they're going to want to make sure that they're trying to look at that soft landing scenario as opposed to recession. So that's where the delicate balance is going to come. Do I need half points? Do I need quarter points? How far can I go? What kind of debt situation? Lots of things to consider, but I do agree. I think that there's at least another half point, maybe 2 of those coming down the horizon. So after that being said, I mean, as we can see by the little lightning bolts in there, it's time for the one thing that everybody looks forward to, our lightning round, and how we can deal with it that way. It's the most important topic we have today. So I'm going to do the main thing here, and I'm going to sit back and be the guy answering the questions to start with, and I'll let you start, and then we'll go from there.
Gotcha. Rapid fire here. I'll get 3 or 4, and then you can throw 3 or 4 my way. Let's start off from the movie theater. I know we're both big Marvel fans. You have Doctor Strange 2 and Thor 4 both coming out this year. Which one does bigger box office?
Oh, I think Doc Strange. Now, my main reason is we've been waiting years for the second sequel to this. We already had that Spider-Man tip-off. I don't want to ruin it for anybody, but it's a multiverse thing that's going on, and anybody who hasn't seen it, go and see it. So I think that's going to lead into a lot of different things that we're going to find out about the Marvel Universe moving forward. As much as Thor's been good, I think that you're already into the 4th installment. People have already seen this. So my view is Doc Strange is going. That's going to be the one that's going to lead as we go.
Alrighty. Well, on the financial note here, we talked rates, we talked commodities. Canada very commodity heavy. Does the Canadian stock market outperform the S&P 500 this year?
Yes. I could leave it at that and just say no anything else, but yeah, I do believe it. I think it's the same thing. We just mentioned commodities are not short-term at this point in time. I think that gives us that huge lead going forward. Not being as diverse as the U.S., we have much better chance if commodities maintain themselves as being the market to outperform. We haven't done it in a long time, so it's about time we get a year on our side.
I think we're about 13 years in a row the U.S. has outperformed.
Exactly.
Anyway, so what we're
doing,
we're Canadians to move here. Last question here. Netflix oriented, they just reported their earnings, horrible numbers. They saw a big drop. They also talked about doing an ad-supported tier, so free subscription, but you have to view the ads. Do you think they go ahead with it, and is it a good idea?
I think they will. I'm not a fan of it. I mean, personally, if I'm paying for a streaming service, it's like going to the movies. I don't want to see commercials beforehand. That's why I don't have normal TV for it. So I'm not a fan. I think that people will be a little hesitant at first, but they've gotten so used to the streaming service that they'll pay just to have it done. So I think they do go forward with that, and I think it will help them out in the end.
There we go. Those are my questions. We'll switch gears here.
Now I get that sort of scenario. Okay, I'm going to start off with something on the sports-related side. Of course, the Jets didn't make the playoffs, but we have 3 Canadian teams in there. Is this the year a Canadian team wins the Stanley Cup?
Oh, they have some tough competition. There are some really strong teams out there this year. Even in the West, I don't know. I think the Leafs have a chance, but I'm not a Leaf fan, so I really don't want them to win a cup. But they have a strong team, and I think they have a pretty good shot at least making it to the conference final.
Oh, perfect. That's exactly the way we're going. So, yeah, I'm the same way. I don't want the Leafs to win, but I would like a Canadian team in there somewhere. Okay, if I'm taking a look, we talk Bitcoin all the time. We haven't really mentioned it. Now, Bitcoin's been up and down. Will we see a new high in Bitcoin this year?
This year, oh, that is tough. I think eventually you're going to see a new high in Bitcoin. The Bitcoin, we talked before, is it related to inflation? Is it like gold? Well, all that's been thrown out the window.
Exactly.
Spiked and Bitcoins are cratered. It's more related to tech stocks. At least that's the correlation we've seen recently. It's following in the NASDAQ 100. So I think eventually you'd see a new high. I don't think it happens this year, though.
Oh, okay. On that note, I got two more to ask you. The first one's going to be fairly simple. You asked me about commodities. On that note, will the TSX hit a new high this year?
Yeah, that's a slam dunk. It was like 5 points away from a new high before the most recent downturn. I think you are going to see another new high for the TSX this year.
That's great. And the last question I want to deal with is sort of that scenario. You already mentioned the movie thing. You asked me on the Marvel front. I'm going to ask you one on a different one. Summer blockbusters that are coming out. There's Jurassic Park Dominion. There is Top Gun Maverick. Which one makes more money at the box office?
Oh, Jurassic Park. I'm not sure Top Gun's going to be able to recreate that magic. I don't know how many decades later. Like, it's not the 80s. I'll probably go see it just for nostalgia, but I think Jurassic Park is going to be the bigger fan favorite there.
Perfect. Nope, I'm done with those things for today. I mean, other than that, if you have any more information you want to know about or questions that you want us to ask each other on another Back and Forth, please visit us at chatwithclintonandkevin.com. We're more than happy to answer those questions on your movies, your sports, and most importantly, your financial situation as it is. But other than that, I think that we've covered a lot of different topics today. We've adjusted where we think things are going with rates and commodities, and that'll set us up for when our next meeting comes. So I'm giving the last words to you.
Here we go. We'll see you again soon in another video. Take care.